Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Wednesday, July the 6th, 2011. Well, another small bodied day today, and that's in stark contrast to the trading that we had over the previous week with this very bullish move, these very large green bodied candles. Today, the buyers have made some net bullish progress, but only a small amount. Really very much different than the very large green-bodied candle that we saw that broke out from the top of the cloud. Now, interestingly, though, this market actually tested down within the cloud and found support at the 1332 area. And we can see this large shadow on the bottom of this candle. So that does raise some hope for a potential continuation of the trend to the upside. Even though we have had this very strong upside move from down around 1265, the sellers have really shown no strength in testing into this first time frame uptrend. They have lost commitment as they traded down to this 1332 area, as we said, and also as the market traded within the cloud. So a very good example of how the cloud can hold as an area of support or resistance, and in this case on two occasions now, yesterday and today, we see these shadows on the bottom of the candles as the sellers lost commitment to taking this market lower. The buyers have actually closed this market up towards the high, and they have taken control of this market throughout the trading day, although they weren't really strong enough and didn't show enough commitment to take out the resistance now at around the 1340, 1341 level. So on three occasions we've now tested that region. So if the market is going to continue trending up, then that is a very important area for the market to take out. We also have very strong resistance at 1344. So obviously this 1344 region, this resistance is working as a zone, and that zone is extending down to this level, down to 1341. Now, if we see this market bounce off that area and we have a bullish breakout up above this 1344 region, there's a very strong possibility that the market will trade up to around 1363. There isn't a lot of resistance until we trade up to around that region. So a good bullish move would see the market appreciate at least 20 points above this area. Now, in candlestick terms, this is also a potential change of trend, reversal. It's a reversal pattern, and it's still a tweezers top pattern. Yesterday we had tweezers top, and today, once again, tweezers top. We haven't had confirmation of a change of trend because we haven't had a lower high and a lower low. Just remember, however, that when we're assessing the possibility of a change of trend, we do need to look at what the bears will be running into, and as we said yesterday, very solid support down below. We have the area from the cloud, the top of the cloud around 1335, extending down now to about 1313, very large area of strong support, and within those areas we have some other zones at 1332, 1324, and down to 1313, where we will possibly see the market hold up. So even though we have a strong possibility of a change of trend, there is very good support down below. Now, in Ichimoku charts terms, this market remains positive. We had that bullish breakout previously on a very bullish candle, and the market has tested down to within the cloud, and we've remained trading up above the cloud to give us a bullish market in big picture terms, although not terribly bullish because we're only just trading up above the cloud. The market is, however, trading a fair way above the Tenkan Sen and Kijun Sen. That's the pink line and the green line here. And that denotes the market being bullish in the medium term and fast term time frames. The Kijun Sen is pointing flat, and that does raise the possibility of the market testing back down to lower levels. Quite often it attracts price action. We have seen the market attempting to do that. We have seen the bears attempting to sell off and test to lower levels, but as the market does that, the bulls come back in and buy the market back. So that really says something about the strength of the bulls versus the strength of the bears. So obviously for the next day's trading, we should be looking at this area around 1332 for a potential change of trend, because we do have that tweezers top pattern. But also certainly look to this region around 1341, extending up to roughly 1344 for a potential continuation to the upside and a test up to around 1364.